Hello traders, and welcome to the very last trading day of 2025. So we're almost finished the year. Look, this time of the year, markets always go super quiet. We don't really get too much action. And look, most asset classes, that is the case. They've pretty much all gone dead. But we are still seeing some volatility in one market. And no prizes for guessing, that is in the precious metals market. Now look, after the big sell-off that we saw on Monday in precious metals, a big turnaround, we saw silver down over 9% and gold down 4.5%. Yesterday, right from the open, buyers stepped in both gold and silver and started taking those higher. In silver, it had a fantastic session. It finished up around 5.5%. But silver, opened around just below $72 and traded as high as 78, so almost went back to $80 in one day. So seeing a $7 move again in a day in silver. These are phenomenal moves. A big day in silver is if you get say $2 or something like that. Seeing $7 is absolutely extraordinary. But seeing this almost on a daily basis now is just unreal. In any case, yes, silver has retraced a lot of those the losses from the previous session, and at the moment, look, it looks pretty obvious. The key levels at the moment: $70 on the downside and $80 on the top side. So break of either of those two levels, break of $80, and look out. No doubt we'll probably be targeting those record highs at 84 and possibly higher. And a break at 70, and then maybe a bit of a setback and some more consolidation. But look, one thing you can't take away from silver is that it is a raging bull market. It's been one of the best trades for 2025. Up a stunning 170% for the year. A lot of the focus this year really wasn't gold. It's only really flipped to silver in the last month or so when it started going parabolic. But look, silver has been the trade, no doubt. Gold, though, it pretty much finished square. So if you logged on, you had a look at the gold close, you probably thought, not much action. But you're wrong. It did have action. Gold did trade almost $100 range, $80 range, went all the way up to just above 4,400 before the sellers stepped in and kicked it all the way back to almost opening levels. But again, look, the levels for gold looks as if the real support is around technically around the 4250 area. You've got some good uptrend support, and the 50-day moving average comes in around 4,200. So gold, like silver, has been a massive bull market as well. So no doubt, if you see those levels, that's probably where you probably want to be buying fresh long. But anyway, today, if there's probably any market that is going to move, that if you still want to trade something, it's precious metals, 100%. This time of the year, also, a lot of the big Wall Street shops come out with a lot of 2016 predictions. It's quite interesting. Goldman Sachs on commodities, their 2006 picks. So some of their top 3 picks. Their number 1 commodity pick for next year is gold. Surprisingly, it's not silver, but it is gold. They think that we can target up towards 4,900, so buy gold all the way up to those sort of targets, so just before 5,000. And the main reasons why Goldman's have given that is that they believe that central bank buying, which has been underpinning this huge rally in gold right from the beginning and from levels below 2,000, is going to continue. So that's their number 1 takeaway. The other one, also quite interesting, is that private personal portfolios in the US are still very undervalued in gold. ETF gold holdings for them is only at 0.2% of their portfolios. That is nothing. So basically the takeaway that Goldman's are saying here is that retail has not even come into this trade properly yet. So there hasn't been any retail FOMO as far as they're concerned, and that is another reason they believe that long gold is still very much a very good trade. The second thing that on the commodity front for Goldman's is crude, and they're basically saying that the bears are going to win again in 2026 and to remain short crude, and that levels will be depressed for the simple reasons I think there's massive oversupply still in crude, and it's going to take the whole of 2026 to get rid of that oversupply. So for the crude bulls who are thinking of buying, if Goldman's are right, you still have another year to wait before maybe that long trade is going to start to work. The couple of factors though that they said that may change their mind is one is that if OPEC did come out with some huge production cuts, and they said it'd have to be pretty big, and also obviously if there's some geopolitical concerns. And the third top commodity trade for them is actually copper, and the main reason there is that they believe that, the saying is that copper is something that is used in the AI data centers, something that obviously there's hundreds of billions of dollars being thrown at AI and building these data centers, so they're going to need a lot of copper. So for them, copper is certainly a decent buy as well. So there's a couple of interesting notes on the commodity space. Anyway, look, again, today, last day of trading, besides precious metals, really can't see much action anywhere else unless something came out from left field. Obviously tomorrow is New Year's Day. All markets globally are closed except for crypto, and then we've got one day Friday before we go into really what's going to be the first real trading week for the year next week. So anyway, Happy New Year. Good luck with 2026, and we'll catch back in with you shortly.